Good morning. This is the market update for the 22nd of October. What we've seen is that equity markets are weaker today pretty much across the board, and that's partly because of poor company results. The results season is beginning to kick off, and also because of some very poor economic survey data from the UK and the US. But what we have seen is LIBOR continuing to ease down, and the VIX, the volatility index, is tending to decline. We think some of the recent volatility that we've seen in markets has been due to very low trading volumes. On the support picture for banks, we're seeing bank support funds being set up in a variety of countries. Sweden announced a large fund the other day. We've seen France and Germany setting up funds. The US is also providing a line of funding to cover redemptions from retail money market funds. And that's one way of feeding cash by the back door into the corporate sector in the US, because it will involve wholesale purchases of commercial paper. We've seen in the developing countries a number of problems. In Argentina, in particular, the government is taking control of private pensions because it's very short of cash and it's attempting to stave off default. We're also seeing the IMF in negotiations with a number of developing countries aiming to head off sovereign defaults. On the currency markets, we've seen the dollar and yen up sharply against sterling and euro. Some people think that that's because of expected rate cuts in the European countries, but it's also, I think, due to hedge fund unwinding of the carry trade. So some very sharp movements there. We've also seen the oil price and commodity prices down generally, and the oil price was expected to stay up ahead of the OPEC meeting on Friday, but it's not managed to hold on to those gains. We thought it'd be worth looking at some specific stock stories, in particular ones where the short interest is actually declining, not because of any ban, but because of a change in the outlook for the stock and the associated business. So the FT today had a big article about the ethanol market, which has been through a boom and a bust over the past few years. And we thought it was worth looking at some of the most relevant stocks there. So if we look at the market cap, proportion of market cap on loan in stocks like Aventine Energy, it's dropped from a peak of 18% in July to 6% now. We've also got very famous stock in the ethanol market, Pacific Ethanol, which peaked at 16% and has dropped down to about 10%. So we've seen quite a bit of short covering following some fairly big price declines in those stocks. Now, with growing evidence clearly coming through difficult economic times ahead, the focus in the market is beginning to look at stocks where we've got recession-proof earnings. Some of the sectors that get mentioned in that regard are utilities and consumer staples. So looking at some of the stocks that you would expect to see, here's one, United Utilities in the UK. The short interest was quite high back in July. It was around about 24%. It's now just over 3% today. And indeed, July was a 2-year high. The attraction of utilities is that they tend to carry on paying dividends, and those dividends quite often increase. There's a few other stocks in the consumer staples area in the US. One of those is Baxter, and you can see that the market cap on loan is very low indeed. Well below 2%. We've got 3M, which makes things like sellotape and post-it notes. Again, market cap on loan very low here, less than 1%. And Colgate, things like soap and toothpaste, market cap on loan again very low. We sometimes refer to these stocks as the dogs that didn't bark. So there's plenty of scope for people to be shorting them, but they're not. And finally, thinking about the oil sector, although we've seen a lot of weakness in the oil prices, it's halved from its peak. What we see in specific stocks is still some very low short positions. So here's Exxon, where the market cap on loan, again under 1%. Devon Energy, which was already very low and has dropped even further. The stock price has had a sudden bounce up, so there's been some quite heavy short covering there. That's the main activity that we're seeing in securities lending at the moment. So I wish you the very best and have a good day.